Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Jack Eadie of Downing Ventures to talk about the Downing Ventures EIS fund. Jack, firstly tell me about Downing Ventures and then give me some background about yourself.
We've been around as a fund for about 10 years in total now. We've got about $200 million under management. We're focused on thematic investing, and we do that across multi-stage, primarily focusing on Series A and B. We have a team of about 14 people in total, with most of those people being in the UK, also some others in Israel as well as the US. I joined Downing a little over a year ago now and have been in the venture capital world for about 10 years in total. I was previously at a fund called Next 47, which is a €1 billion fund backed by Siemens, focused on deep tech and enterprise investing, Series A through to Series D. And then before that, I was at a fund called 8 Roads Ventures, which is backed by Fidelity, primarily focused on doing Series A and B deals, enterprise software in Europe. I've also then been a startup consultant, an investment banker for my sins at Goldman, as well as being an entrepreneur as well.
And tell me about the EIS. What does it aim to do for investors? How many companies are you looking to invest in?
So the EIS side, we're typically looking to get our investors into between 8 to 10 companies. As I said, we focus on multi-stage, which I think is slightly unusual. So we're doing everything from Series A and B, whereas I think a number of other funds just focus on much earlier stage. I think that's pretty interesting because actually we see a much kind of de-risked profile of a company. They typically already have a number of customers in place. They have kind of a well-built out product, as well as also kind of some early revenue as well. We focus on 3 core themes within that. So we focus on healthcare, deep tech, and enterprise. And I think the other thing that we also really focus on from our consideration of the EIS ventures is on working with top tier other network of investors globally. So we've worked with a number of other really interesting funds across the globe. These are kind of the top tier funds globally that we're investing alongside.
And how do you find these opportunities and why do they come to Downing?
It's a combination of different things, I'm sure you can appreciate. One aspect is that network piece. So it's actually having built out a network of other kind of co-investors as well as entrepreneurs. They come to Downing. They've seen that we have a number of kind of really good portfolio companies, as well as also can kind of add a lot of value. So we've built out a portfolio support team that really looks to help scale companies. A key part of the portfolio that we can really help deliver returns and bring them to the underlying investors. I think the other key piece as well is around this thematic aspect of our investment process. So we look at industry trends, identify kind of different companies in this space, and then also reach out to them as well to see if they could be a good fit for us.
How many companies would typically be in a portfolio? And also then what sort of size ticket are you looking to invest in per company?
So it's typically between about 8 to 10 companies in any one of the EIS portfolios. The size of the ticket ranges a little bit, but traditionally about between 1 to 5 million per ticket. We also have some VCT capital as well that we invest alongside our EIS that enables us to be a larger part of that round as well.
Okay. And do you want to give me some recent examples of investments that you've made?
Yep. So one company that I'm particularly excited about is a company called Storage OS. That's a company that's in the developer tools space. So they're looking to help a number of developers with essentially managing their storage. We worked with them in just kind of the early part of this year, where we led their Series B. We have then also kind of have brought a few other investors along who kind of have a great network within that space. I've done a number of deals in that space as well. So someone like Uncorrelated Ventures is one of the funds we brought in there, and we're investing with Bain Capital Ventures as well on that deal. So that's one we're really excited about. We spent a lot of time going through the theme, looking at what was happening in the market, and then believe that this was a really interesting one for us. Another deal as well that's probably one of the pretty more high-profile ones was one called Cornelis Networks. They have developed a new product in the high-performance computing space. This actually was a spin-out of Intel, so quite an unusual deal. That's actually a US company. We worked with Intel Capital on it, and we're able to spin that out. So one that I think will be doing well over the next few years.
And do you want to talk to me about some of the companies you've backed a bit earlier than this?
Yeah, sure. So I think there's a few different companies in the portfolio that I think are kind of coming through pretty nicely. One of those I think which has been a kind of a good news story recently is a company called Loyalty Lion. This is one that essentially helps with loyalty programs and retention for e-commerce platforms. They're working with people like Shopify. What's been really interesting, we've been in there for a few years. The company's been scaling really well. And what's been really good for our investors is actually in the most recent round, we also managed to take some capital out, so recover their cost of capital, but also leaving a stake in that has significant upside. So if you're kind of thinking about how we balance our risk for our investors, getting some capital out early on, as well as also providing the upside, I think it's quite an interesting story. Another company that's been a really interesting one is, I guess, a bit of a rocket ship to some extent, is a company called Trini London. This essentially is a company in the cosmetic space. We've been investing in them for a few years. The company continues to perform incredibly well. They're now scaling rapidly in international markets as well as kind of building out a broader range of cosmetics as well. So that's another one that has been doing very well. We then also have a number of other healthcare portfolio companies that are coming through. A couple of them have gone through to IPO more recently as well. So yeah, lots of interesting stories on the portfolio side.
And what do you add to these companies, and how involved do you get with them?
We believe in being an active investor at Downing. So we will typically take a board seat if we're leading the round. We also, as I mentioned earlier, we've built out a real kind of significant portfolio support function. So whether that be helping connect to potential customers, or whether that be helping to connect to future investors as well. We also have built out a component which is that we're kind of around the PR and comms side. So if companies are looking to gain more kind of exposure on that side, we have a dedicated person in-house who helps the portfolio. We've also built out what is a team of venture partners. So we now have, I think it's 5 venture partners in total. They have a lot of operational experience as well as kind of network as well that can add a lot of value and really help the portfolio, right, which is a key part of driving returns for investors.
And have you had any exits that you'd like to talk about?
I guess the Loyalty Line one, which is a really good example of one that's kind of happened more recently. Some of the healthcare like Aracor and Congenica that are going through IPO process at the moment will kind of deliver good returns for investors as well. There's a few more in the pipeline, a little bit too early to speak about at the moment, but certainly it's an exciting time for Downing Ventures.
And how risky is this for investors? And in a typical portfolio, how many companies would you expect to prosper? How many companies would you expect to fail?
Yeah, it's an interesting question. I think ventures more generally is about trying to pick outliers, right? Is to hit these home runs, and so making sure that you're in the right companies is almost more important than not picking the losers. Having said that, I'd say with our approach of focusing on more of a multi-stage investment, so going across from kind of Series A and B, we're typically getting a lot more proof points. So the idea is that we are much better at identifying early on which ones those winners are going to be, and actually making sure that we are reducing the number of losers down.
And what are the challenges you are facing as a manager at the moment?
I think being remote to some extent has its challenges. I think typically, previously when we were, prior to COVID times, obviously we've spent a lot of time with management teams face to face and learning how to think. Obviously, as you bring that online, you kind of have to go through a slightly different process. We do more kind of online and desktop work ahead of actually kind of building out that thesis and conviction with the management team. Having said that, I think we've kind of actually had a really interesting opportunity that we've taken advantage of, which is being able to look at a broader set of markets, because actually the local aspect of being both around going head to a nearby coffee shop isn't as important. I think for us, we're continuing to find, how can we continue to think about how can we help the portfolio. It's a really core part of what we do, and so I think that's kind of a key challenge that I kind of continue to think about. I think the other one for us, I think, is we're continuing to build out that network, and so whilst we've already got a key number of kind of high-profile venture firms that we work, whether it be people like Andreessen Horowitz or Lightspeed, I think there's also a number of funds that we also need to kind of continue to build out our relationship with to make sure that we are really seeing all the deals we can, and then also kind of hopefully get into the top ones as well.
And if I was going to put money into an EIS this year, why should I invest with you?
So I think there's three core reasons. So the one is the multi-stage aspect. So we're one of the very few fund managers who goes across doing multi-stage, and particularly doing more Series A and B, which we think is a better risk-return profile. The second one is that we're thematically focused. So having our core sectors of expertise across healthcare, deep tech, and enterprise, and being very focused on those, we believe drives better returns for the investors. And then the third one is really our network and access. We've demonstrated very clearly over the last couple of years that we have an amazing network of other co-investors who we're working with, who we can get into the top deals with, and really that's fundamentally going to drive returns as well.
Jack Eadie of Downing Ventures, thank you very much.
Thank you.